Hey, fantastic. Good morning or good afternoon, wherever you are presently residing in our fair country. Welcome. My name is Todd Miller. I'm the President and CEO of Tech Canada, and it is my privilege and honor to be here today with all of you, and in particular, be with Dr. Peter Andersen for a 2021 economic outlook, specifically related to not only the outlook that Dr. Andersen prepares, but also to our CEO Confidence Index. So it is a real honor for me to be here with you, Dr. Andersen, and I appreciate you taking some time out to share your insights and the forecasting and all the things that you've written recently with all of our members. We have a very well attended session, so it's quite exciting for all of us to be here for the next hour that we will enjoy. So again, my thanks to everybody for taking some time out of their schedule. And without further ado, what I'd like to be able to do is introduce Dr. Peterson Andersen. He is an independent consulting economist specializing in economic forecasting. He obtained his doctorate in economics from Harvard University. Early in his career, he was the assistant chief of the Bank of Canada Research Department, where he advised the Governor and Bank of Canada on economic conditions and the economic outlook. Dr. Andersen also spent several years with major Bay Street investment dealer firms before founding Andersen Economic Research Inc. He acts as a filter, separating the signals from noise in order to provide clients with useful information that they really need. So, without further ado, I'm pleased to introduce Dr. Andersen. Welcome, Peter. Thank you for joining us today.
Thank you very much, Todd. And ladies and gentlemen out there, thank you very much for your time. It's a great pleasure for me to talk about the Tech CEO Confidence Survey. It really does make a major contribution to the kind of information that we really desperately need at times like these. One of the things that excites me, Todd, about the survey is that it focuses on small and medium-sized businesses, our group, our family of members and companies. And this is such an important group for the economy. This is where the job creation comes from. This is where the ideas and the future is generated. So this is really a unique piece of information. We do have business surveys in Canada, but really we don't have the kind of survey that we're getting from our tech group. The Bank of Canada does do a survey, but it's only for the 100 largest companies in the country. And I think that by looking at our group of 200 respondents, we get some interesting news that serves as a barometer in terms of where we've come from and where our leaders think we're going. So the other thing that really pleases me and excites me about our survey is that it is so timely. It is almost a real-time piece of information. And let me put that in perspective. Last Friday, we received some very important information from Statistics Canada. It was for retail sales, but it was for retail sales in November. Our survey was carried out just before the end of the year. The responses took place basically in the final 2 weeks of December. And as a result, here we are. We're on a platform of January looking into a new year. And this information is very, very up to date and very, very timely. So I do want to congratulate Tech for doing this survey. And I think it's wonderful that the survey is done every 3 months, because that allows us to give a timeline and to show the shifts and to show the trends that are developing and emerging. And we're able to not only look at the past up to the present, but we're able to get an idea of the future going ahead from the opinions and statements of our member responses. So thank you very much for your responses out there. They really are important and they're very, very useful. And full of lots of insights. So having said that, I want to give a few views on my own, just in terms of how I see the situation as of the 29th of January. And it has been changing so quickly. The dates have been so important. December the 11th, December the 18th. This is when we saw the approvals, the emergency use authorization approvals for Pfizer and Moderna. So we are ahead of schedule with the vaccines. And we had an announcement this morning as well that Johnson & Johnson has released its results. So the whole contour and the evolution of the virus, the vaccines, and the business cycle have been affected very recently by what's gone on. Another date that's very important for us is January the 5th. January the 5th, we had the 2 Senate runoff elections in Georgia, and it was a big surprise. Not only was the news on the vaccines a big surprise and a positive surprise, the Georgia runoffs gave both seats to the Democrats. And that meant we do not have a split government in the United States, and we have a Biden administration that can do big things when it comes to the economy and when it comes to support. So what I see, everyone, is a new business cycle. I see it stretching ahead of us. And that's what our membership basically was saying in our survey as well. One of the key things in our Tech CEO survey was that our membership, our leaders, could see the way ahead to the beginning of the next expansion. And I think that the economic fundamentals are pointing in that direction too, because the vaccines and the stimulus, and I would use the word big, it's big stimulus, are going to drive us into a positive business cycle future, and we're going to have substantial backlogs of demand. And those backlogs of demand are going to be both in the business sector with investment and also inventory accumulation, but also with consumers. We have been denied so many things that have been normal features of our life. And we are going to want to get back, and we are going to want to do these normal types of things. So many service-related expenditures have been denied us because of the lockdowns, the quarantines, and the virus. So that is basically the combination of events that I think will give us a multi-year expansion. This is going to be an expansion that lasts. And it's based really on the vaccines and their efficacy, because it looks like we could have broad immunity in the United States by mid-summer. It might even be faster than that. Don't be surprised if you hear the date July the 4th mentioned. That will be a patriotic day, and it will be a target day for broad immunity in the United States. Broad immunity is coming in Canada as well. I think we can get it before the fall. So we are obviously concerned about the vaccine rollout and worried about it, but it's coming. And with broad immunity in our communities, I think you're going to see excess demand. You're going to see a surge in pent-up demand. And with that will come supply problems. The situation is never perfect, is it? We're going to go from worried about insufficient demand to worried about too much demand. And how can we supply the market? How can we keep our customers happy? My forecast, the crystal ball, says that we should be getting close to full employment by the end of 2022, and we should be there in 2023. Now, here is a quick look at the United States economy. I would point out to you, though, that any forecast has to be looked at with a grain of salt. It's not the precise percentage number that counts in a forecast. We know that they'll never be absolutely correct. What counts though is the order of magnitude. And you can see my prediction here for 2021 and 2022. Big years. When have we experienced something like this before? Well, ladies and gentlemen, you've got to go back to the early 80s, back to 1983, 84. We have seen something like this before, but it's been a long time. But it has happened, and that's my prediction for the next 2 years. One of the things that's helping us is that the financial system was not damaged the way it was during the last recession. The great financial crisis saw the financial system on the ropes. This time, quick action by policymakers has allowed a firewall to be created between the economic disruption and the actual financial system. So a healthy financial system is going to help this recovery gain momentum and to continue. But in addition to this, everyone, there's a new game in town. And that new game is average inflation targeting. Canada and the United States, the central banks in both countries, are going to want to have inflation averaging 2%. Now,
Dr. Andersen,
yes.
Dr. Andersen, I wonder if I could just jump in. I know how wonderful this world that we live in today, where technology works for us, and sometimes it doesn't. But I think I'm not sure, but I think you're on a slide, and we're continuing to show the introduction slide. So I wonder, at the risk of interrupting your talk, and I apologize for that, but I wonder if we're supposed to be on a different slide other than the opening slide.
Well, we're supposed to be actually on a different slide. You are right. We're supposed to be on slide number, I would say, slide number 4 right now.
Yeah, so we're still on that first slide. So I wonder if, Aaron, if you're with us, maybe you can support us here, because we're still showing on my computer, we're still showing the introduction slide.
Thank you, Todd. Dr. Andersen, is there a way for you to advance the presentation slide by hitting the arrow key?
Okay.
Or even if you scroll with your mouse. There we go. Thank you.
Thank you very much, Todd. How's that looking now?
Yeah, it's looking great. You're on headline on this one is new central bank targets.
That's right. It's a new game in town, Todd. Inflation averaged below 2% for the last 10 years. And our central banks in Canada and the United States, they want inflation to average 2% over the longer term. So we've been below it for 10 years. We have to be above it for quite a few years until we get that average to even out to around 2%. So it looks to me as if we are going to get central banks being growth-friendly interest rates for a long time. My guess is right out until around the middle of the decade. And so that, I think, is also a factor that's going to give us a longer economic expansion. Now, a couple of diagrams here just to basically show you some surprises. You know, I like to say that a diagram can tell 1,000 words. Can you see this one, Todd? New orders for U.S. capital goods?
Yeah, we're on track now, Dr. Andersen. It's great. Thank you.
Good. Well, this is a leading indicator, Todd. This shows us new order bookings received by U.S. companies for capital goods. These are new order bookings, not just shipments, but future shipments. And we just got December numbers a day or two ago. And take a look at the trend here. We don't include aircraft, we don't include defense industries here. So these are core capital goods orders. take a look at the way that diagram has gone up. We have not only fully recovered from the virus shock, but we are really looking at such a surge to basically almost a new all-time high looking at the historical data. So this says to me that businesses are confident. Businesses are looking at spending on capital goods and in particular spending on business equipment. So here's I think a really good leading indicator for the business cycle and also for Canada, because with confidence picking up in US boardrooms, of course that's going to spill over the border. Let's take a look closer to home here. Here's one of my favorite diagrams, Todd. This is Western Canadian Select crude oil, the price per barrel. We're almost basically back to $40 a barrel again on Western Canada Select. And this is encouraging because the oil price, of course, is important for Canada, but really it's the oil sands oil, the heavy oil, the oil sands benchmark, the WCS price that is so important for Canada and also for Alberta in particular. So I think this is a confidence builder as well, looking at this key commodity price. One of the things I like about commodity prices is that they are so up to date. It's not like the retail sales numbers for November that came out just on Friday. We can look at information on commodity prices, materials prices, and also currencies really on a day-to-day, almost hour-to-hour basis. Now here's another diagram that I wanted to show you, Todd. This is oil by rail, Canadian crude oil exports by rail. I wish I had more up-to-date information, but the point of this diagram is to say, yes, it's disappointing that Keystone XL has been canceled by President Biden, but I wanted to make the point. There's lots of capacity out there to ship more oil by rail. Look at the latest numbers, look how low it has become, and look at the distance between previous highs and where we're currently running in this last bit of data. So I'm saying help is on the way. Oil by rail is going to be a good substitute for pipeline delivery capacity. A few comments here regionally for Canada. I'm showing you the provincial unemployment rates for the month of December. And there are really two provinces here that stand out. You can see the Canadian national number on the top, the average for the whole country. So take these bars and compare them with the national average. And British Columbia and Quebec, they both stand out as being below the national unemployment rate. So there's some good news in these two provinces in particular, Quebec and BC. And I wanted to mention BC because in our tech CEO survey, British Columbia was looking on the weak side. We had rather a pessimistic response from our BC respondents on how do you see things right now? What are business conditions like today? So the feeling is that hope is on the way, and the Canadian dollar supports that too. Canada is a commodity producer. We're very much influenced by what happens globally in the global economy. British Columbia, of course, is very much connected with the Pacific Rim and with China. And the Chinese economy is fully recovered at the present time. So the Canadian dollar here is supporting this idea that the world economy is looking better and the world economy is going to be moving into a recovery very soon. And a number of countries, China and countries in Asia, countries like India, oil consuming countries like India, are already there. So anyway, that's kind of my commentary, Todd, in terms of how I see things. Back to you now. Let's talk a little bit more about the Tech Confidence Index, the Tech Confidence Survey, and some of the valuable messages that it's giving us. Back to
Yeah,
you,
yeah,
Todd.
yeah, wonderful. Thank you, Dr. Anderson. And, in a word, as I read through your economic report and of course our index, in a word, optimism, I guess is how I kind of left that was my sentiment. And I guess we're hearing that from you today as well. Just before I've got a few questions for you, obviously, and as we carry out our conversation, a couple things for our audience. A reminder that the handouts are available to you if you don't have them. Obviously the handouts are in the panel area in the GoToMeeting area. So feel free to download those. And also, if you do have specific questions, I know I've got Aaron in behind the scenes, the guy behind the scenes that'll be monitoring the chat forum and be able to share any specific questions that our audience may have. But maybe to get us started, Dr. Anderson, when I think about the confidence index and of course the work that we do with you, which again we truly we love doing, and I know that it's real time, I guess is what you said as well. I mean, it's even better than some of the other data that is available. So I'm curious, in reviewing the results, how would you compare them with other market assessments that you've reviewed, both here in Canada and of course in the United States? Is the data, consistent? Is it fairly consistent?
Todd, that's a really good question. What I would say is that I have looked a lot at the Bank of Canada survey, and I think that our survey is perhaps a bit more detailed in terms of business practices and how businesses are adapting. So I think our survey gives a special message really for the small and medium-sized business community. And I think it's interesting that our survey is really running counter to a lot of the opinions that we're hearing through general media outlets. I'm always a person that wants to have a balanced view. I don't look on myself as being a cheerleader or a motivational speaker. I like to call a spade a spade. But what we've had is an overloading of negative economic commentary. It might have been because of the divisive political situation in the United States. But over and over, I've heard that, well, we've had a rebound after the summer lockdowns, but that rebound won't last. We're going to see a stall out. We're going to see the US economy fall back again and stall out. And, a double dip recession is still possible. So right now, I found that our confidence survey, it does run counter to that. So what I see is that grassroots opinion coming from our tech leaders is showing something that actually runs counter to what I hear day after day, looking at media reports on the TV and in newspapers.
Yeah, wonderful. I appreciate that for sure, Dr. Anderson. And I'm just curious. You mentioned through your opening comments about vaccine and travel implications, and in that spirit, maybe just switching gears a little bit, I'd be interested in your views as it relates to when you think about just vaccines in general, the availability, the implications. I know you referenced that in your report, so that might be one question of how do you see the implication of vaccines going forward, despite perhaps the obvious. And in addition to that, that almighty work from home element, right? That I've read so many views on, and I'd be curious as to hear your points of view on both those topics.
Well, yes, let me first of all say that I know it's frustrating with rollout, but again, I think that the criticism of the rollout, especially in the United States, has been a little bit harsh. Right now, the latest numbers today from the Center for Disease Control in the United States is that 4.3 million Americans have already, as of today, received 2 doses of either Pfizer or Moderna. 4.3 million Americans have already received doses. But the big number that I'm looking at is that 22 million, 21.7 actually, have received at least 1 dose. 21.7 million Americans have already received one dose. And the dosages now, the latest number that I saw from a day ago was that the 7-day average in the United States is that we have 1.1 million doses being given every day. 1.1 million being given every day. So doing the math and figuring that we need about 70% of the population in both Canada and the United States to be inoculated, doing the math and hoping that we get some help also now from Johnson & Johnson, which is a one-shot vaccine, that we will be there with about 70% of the US population inoculated by the end of July, and hopefully earlier than that. And in Canada, I would say by the end of September or early October, hopefully earlier than that. So that brings up the second part of your question, Todd. What is it going to be like when we do have this group immunity, community immunity? It's not going to be perfect, of course. The virus will still be around, but it will have diminished. So how will business practices change? Now, one of the surprising things, and one of the real messages, I think, in our tech CEO survey is that yes, work from home or work from anywhere will continue to be a feature of business practices and business life. However, to me, the big reveal was that it won't be that big a thing. It won't be for the majority. So the impression that I get is that work from anywhere, work from home will be a special situation thing. Obviously, much bigger than it would have been if it hadn't been for the virus, but it will not be the big thing going ahead. So what that means is that people will return to downtown office space, and downtown office neighborhoods will begin to come to life again. Not back to normal as we knew it. There still will be working from home, but again, it will not be for the majority of people. And I guess the other thing too is I sense there's a feeling of remote fatigue. I was going to say Zoom fatigue, but we're not using Zoom, but I just use that as kind of a comment. So there's a feeling that, electronic meeting, remote meeting fatigue is getting to us, and that many of us are looking to the social interactions and the spontaneity that come with in-office lifestyles. So that was one of the surprises that came from our survey results.
Yeah, very, very interesting. And of course, it's a dialogue that I know all of our members are involved with often about, as you call it, the fatigue, we'll just say, and honor all the platforms that are being used out there from the technology front. It's interesting. I wonder if I can just maybe, once again, kind of switch gears. And Aaron, by the way, feel free to send me a quick note in behind the scenes or jump in if we've got questions coming in from our audience. We certainly encourage that behavior as well. When I think about kind of the economic conditions, they're telling stories, they're telling us kind of where we're at. And for the majority, they're expecting overall economic conditions to improve in terms of the respondents from our survey. It's up 27% from the previous survey. More respondents, 65%, think that their sales and revenue are going to increase. I mean, there's a sense of optimism there. Despite these numbers, I'm curious as to how you're thinking about the feeling of everyday Canadians with the accumulation of debt and the likelihood of increase in taxes. How do these, are they conflicting opinions? What's your perspective on the average Canadian versus what we're seeing in our survey, and what does that mean to us?
Well, I think that's a very good point, Todd. And if you can see the slide that I have up there, this speaks directly to that first comment that you just made. I think that the graphics that you have put into our survey report, I think they're outstanding graphics. And I'm looking at that pie chart where the dark part of the pie chart shows the percentage of our respondents that think conditions will improve over the next 12 months. And that pie chart really tells a story, doesn't it? The part of the chart that is now in the darker color is so much larger in the current survey than in the other survey results shown. I guess with respect to debt, we hear a lot of questions as to how are we going to pay for all of this support that we're receiving from the government. In Canada, it's at unprecedented levels. We estimate that about 11% of the economy, that's what it is, the amount of government spending, emergency government spending in all forms, all of the things that our government is doing in Canada, the income support programs, all of the government expenses to stabilize the economy, it amounts to about 11% of gross domestic product. And this is a very, very big number. And it's much bigger than we've seen in other business cycle situations. How do we pay for it? Well, I guess when it comes to that question, Todd, people really do look at their own situation first. The government debt, yes, it's something that we read about, but what really matters for every individual and every family is how are your own finances doing? And what's happening is that this has been a very unequal recession. There are so many lower income and younger people who have lost jobs, but there's so many higher income people that have been able to keep their jobs by working from home. And the way our community has been able to adapt is really awesome. So what that means is that many Canadians, the majority of Canadians, are still earning incomes and they're not spending money because they're not able to. Their mobility is being restrained. So what we have on our hands is a very large amount of forced saving in the hands of those people who've been able to keep their jobs and who've been able to work from anywhere or work from home. And that is going to be something that fuels our economic recovery once we do get the herd immunity, the broad immunity that we expect to have in Canada before the end of the year. So right now, it's not so much debt that's front and center, it's rather the forced savings and the accumulation of financial assets. People haven't been able to go to concerts. They haven't been able to go to restaurants. They haven't been able to go to sporting events. They've been sitting at home. Yes, spending on goods, things like power tools and electronics and things to fix up their home, but there's a lot of forced saving out there. And that's what's going to affect us right away.
Thank you, Dr. Andersen. And again, just as I listen to your response to that and think about, cash on the sidelines, as you say, and savings, and in your report, you clearly reference, the implications of certain industries. So really encourage our members to kind of pay close attention to where some of that spend may occur. Aaron, thanks for sending me your notes. Please continue to do that. Aaron, and behind the scenes, Dr. Andersen is sending me some questions from our members. So I want to refer to a couple of these questions. We've got some great ones here. First, I guess, would be, Dr. Andersen, do you foresee a correction, or kind of a crash, if you will, in the stock market coming?
Well, that is something I'm worried about, and I'll tell you why. It's because interest rates have gone to such exceptional low levels, and what that's done, it has inflated asset prices, assets of all types, homes, the price of homes, for example, the prices of stocks, with banks paying so little interest. investors and individuals have been trying to find some type of investment that gives a return. And so what could happen is that, you know, the very first upward move in interest rates could cause this elevated level of asset valuation to be shaken seriously. If you look at the economy, and if you look at the value of assets, and if you look at valuations in the stock market, and compare that with corporate profits, they're out of line. So hopefully corporate profits are going to be coming back strongly if my forecast is right, and that will restore the balance between stock market valuations and corporate earnings. However, if we do have a jump in interest rates before people expect it, and even, you know, even a small increase in interest rates could destabilize the stock market. I don't think that would destabilize the economy, because I think the financial system now has been repaired and is in much better shape than in the great financial crisis. But nonetheless, yes, I think we do face volatile stock markets, and that is something to worry about. It's certainly on my worry list, perhaps at the very top of my worry list, Todd.
Well, very good. Good for us to kind of hear those insights, Dr. Andersen, and kind of keep that top of mind. We'll obviously want to pay close attention to that in the future. Maybe hand in hand with that, I'm curious, although you did reference that perhaps the interest rates won't add direct volatility to the economic forecast, but I'm curious, and this is a question from one of our members, what do you believe the key risks that could alter your forecast? You know, what are the key risks that you know, other than interest rates that maybe keep you awake at night?
Well, I would go back to the vaccines and to the variants. You know, we hear about the variant in England, we hear about the variant in South Africa. Will the vaccines continue to have the efficacy that we are counting on? We got such a pleasant surprise when we saw the initial results from Pfizer and Moderna. The Johnson & Johnson results this morning are, what can I say? I wouldn't use the word complicated, but in terms of the efficacy of the Johnson & Johnson results, they're not quite the same as Pfizer and Moderna. And so I think that, you know, the last year has really been shaped by the COVID shock. And to me, I would worry about the new variants. Now, I think that as of today, Todd, the news is still good, that we do have vaccine protection from the variants. But that is today, and things can evolve going ahead. So that is the thing that I follow closely, and I try to really keep track of in the news on a daily basis.
Very good. Thank you for that, Dr. Andersen. And maybe perhaps that's, I caught the news, I'm sure many of our members did as well. Our Prime Minister just recently announced, of course, more restrictions on international flight and what have you that currently the airlines have supported. So perhaps that's right in line and further supporting that concern. Switching gears a little bit, I just, you know, kind of back to the confidence index, and it's a reoccurring question that's coming up from our community today about supply chain. And when we think about, you know, obviously the report talks about, you know, concerns about supply chain and increased demands and how that impacts price. You know, I'd be curious, you know, can you expand on your thoughts on supply chain concerns and what industries are going to be impacted more? And maybe you could just elaborate a little bit more on the whole topic of supply chain.
Well, I'm glad you raised that, Todd, because that is a clear message coming from our membership in the latest survey, that there is heightened concern with respect to supply chain health and the ability to respond to demand. What we've seen is that in some industries, such as construction and housing, we really do have severe supply chain problems right now. You can see what's happened to the price of lumber, to the price of plywood, to the price of oriented strand board, because there has been a demand surprise. And my feeling is that going ahead, given the fact that I think we are going to have widespread immunity developing in both Canada and the United States in the second half of this year, what that means to me is that we will see demand surprises, and supply, I think, will be hard pressed to keep up. Because, of course, business leaders, many of them, have been risk averse. Risk management has been very important, and that means that you want to be cautious with your inventory positioning. But when we have a demand surprise, to me, what it means is shortages and scarcity. And in the United States and in Canada, we've already seen a growing list of materials and commodities that are in short supply. The list includes aluminum, corrugate boxes, steel, hot rolled steel, electronics, and electronic equipment. So we do see already supply shortages. And the latest surge in virus cases, what that has done, it's caused companies to cut back production, because when workers quarantine, even though they may not have been infected, it means that they are away from work for 10 to 14 days. And by being quarantined, it means that factories are short of workers, and there have been and will be a number of plant close downs, short-term close downs, as key workers are quarantined because perhaps a family member has been infected, or maybe because contact tracing has shown that a person may have come in contact with an infected person, and therefore that person has to quarantine. So to me, what the virus is doing right now, the virus is not causing a demand problem. People can stay sheltered at home and continue to buy and have goods delivered, but it's causing, I think, a supply problem, where when people stay at home, it means to me that we're not able to operate at full operating capacity. So I see a supply squeeze really being part of our future. And I think it even comes into human resources areas. For example, will a service-related business firm have the human resources to be able to quickly ramp up staffing in order to deal with a surprisingly strong business flow and to keep customers happy as we get group immunity, community immunity later this year and next year? Yeah. So it's a big problem, and I think it's going to be a problem for the future.
Yeah, I hear that for sure. And of course, I'm sure all of our members are thinking about that as well and keeping it top of mind. It goes back to your earlier comments about vaccine and the importance of rollout and herd immunity or what have you, right? So here's maybe just a little bit of a different one, just outside of from one of our members, but outside of the context of the CEO Confidence Index. But be curious as to your perspective on this. What do you think we can expect from the federal government in response to large deficits that are being created?
Well, I think that we have in Canada the ability to do more, and I think probably we will do more. I believe that in Canada, the start off to 2021 is a bit difficult. I do expect the Canadian economy in total to show a decline from Q4 last year to Q1 this year. I think that there will be a decline in the Canadian economy, and I think that the unemployment rate will actually rise temporarily in January, February, and March. So I do expect the federal government to do even more. But I think that when we look at what's going on in the United States, I think that they are going to show an example that will put Canada's performance in some perspective. Because the Biden administration, as you know, has proposed an additional $1.9 trillion in government support, and that could happen quite early in the year. And I think that probably Canada is going to follow with another substantial amount of stimulus as well in the spring. So I think we're going to get more in the way of deficit financed government emergency spending.
Yeah, very interesting. Yeah, yeah, it'll be interesting times on many landscapes that this pandemic has perhaps created. Regional impacts, Dr. Andersen, just again curious, firms in Alberta show a weaker outlook on profitability, investment and employment. There's a
Yes, just talking about British Columbia, Todd, you know, on so many of my business trips, when I went out to Vancouver and then I went out to Victoria and met with pension fund managers and people that we were consulting with, you know, I heard over and over again that British Columbia walks to the beat of a different drummer than Ontario. And it was really something that was drilled into me, that it was the Pacific Rim and the west coast of the United States that were so important to British Columbia. And here I see a green light, and I think that that green light is going to get brighter for British Columbia because China is fully recovered and is going to have a strong growth year in 2021. And that is going to spread out through the Asia-Pacific region. And I think that is going to be a key factor for British Columbia.
Yeah, very interesting. Maybe just to elaborate on that commentary, Dr. Andersen, other regions, when you think about just the more diversity across Canada, you know, obviously BC, you're seeing some positivity there, green light, as you say. Other comments on more specifically in the different regions?
Well, yeah, let me make a comment on Alberta. Alberta has really suffered 3 recessions in the last 3 years. It suffered a recession in 2015 when we had another drop in oil prices. Alberta was in a recession in 2019 before the COVID shock, and now we've gone through the COVID experience. I think that Alberta is going to benefit from rising oil prices. I do believe that what I was able to show you on WCS, Western Canada Select Oil, I think we're going to see continued increases. Now, I'm going out on a limb here in saying that, but we are looking at West Texas oil and Brent in the mid-50 range. And I would expect that with the kind of global economic recovery that is taking place, that it's going to have a significant effect on mobility and also the demand for oil. So I would think that oil is going to be lifting confidence and business activity in the province of Alberta. Just in saying that, one other comment: the virus, as we get a vaccine solution, more or less, it's going to be a global immunity that we are going to be seeing. Not perfectly coordinated, but it is going to be global in scope. And so the way I see it is that we are looking at the virus diminishing on a global basis. Not necessarily next month or the month after, but that's where we're headed.
Very interesting. And as we just kind of go across our region, I know I read some positivity from the index in terms of our Ontario landscape. Commentary about what you see inside of that region?
Well, I don't want to forget Winnipeg. Don't want to forget Manitoba. I think Manitoba is the transportation hub of the country, and what I can see in Canada's future is an increase in mobility, an increase in rail transport, an increase in trucking. And so I see that there is support coming in Western Canada, in Saskatchewan, and in Manitoba as well. In Ontario, Todd, our survey results show us that our business leaders in Ontario are perhaps the most optimistic of any of the Canadian provinces, with the exception of Quebec. both Quebec and Ontario are really quite optimistic. I think that this is because of the linkages with the United States. It's almost as if the United States economy is the 800-pound gorilla that is pulling Ontario and Quebec into an economic recovery.
Very interesting, right? And thank you for making sure that I didn't forget about Manitoba and Saskatchewan. Appreciate the commentary there as well. Yeah, I have I think maybe time for one more question, and this is maybe well, I'll ask it from one of our members, and look forward to get your perspective on this one, Dr. Andersen. Any predictions as you think about taxation changes, and in particular capital gains and corporate taxes? How do you think about that landscape?
Well, my feeling is that the Biden administration will, to some extent, set the pattern for the Trudeau government in Canada. It seems to me that we have several steps that the Biden administration will take. In February and March, the focus is going to be on emergency response, stimulus. Then, as we get into later in the summer and the fall, I think the Biden administration then, in a post-pandemic situation, is going to be looking at tax increases and some of the other promises in the election platform. And so it looks to me as if the example of tax increases in the United States very well could find a friendly ear by the Canadian government in Ottawa. And the list is fairly long. It includes taxes on capital gains. It includes estate taxes and making the tax system perhaps more progressive, and also raising the tax on corporations. That seems to be the playbook in the United States, and it's very possible it will be adopted to some extent in Canada in terms of focusing on how do we pay for all of this, that big question. On the capital gains side of things, the change in capital gains taxation could be limited to those with the highest incomes, but we will see. And then, of course, we have the environmental taxes that are going to be forthcoming too. Taxes on carbon and stimulus for green energy, for wind and solar. But I guess I might add too, in a final comment, we'll probably see more emphasis on encouraging the electrification of the vehicle fleet. Mm-hmm. Now, to me, the electrification of the vehicle fleet requires electricity. And where does that come from? So I think natural gas is a big part of it. So it's not going to be all just solar and wind. I think that natural gas and the natural gas infrastructure, the storage and the transportation of natural gas is going to receive a big boost by these, what I would say, North American measures.
Yeah, wonderful. Great closing comments there for sure, Dr. Andersen. You know, I always enjoy reading your report, the process that we enjoy in our community with the CEO Confidence Index. It truly is, I think, for all of our members, something that we look forward to, and obviously completely respect your points of view and just look forward to it. So I want to thank you for taking the time today to spend this hour together. I've enjoyed it for sure. So again, thank you very much, Dr. Andersen.
Well, you're welcome, Todd. I've had fun.
Tremendous. Well, perhaps we'll have the opportunity to do this again for our next quarterly review, and I'll look forward to that. I'd like to also thank all of our members. We have a tremendous amount of members joining us today, and I just want to thank you all for participating in today's session, but also participating inside of the CEO Confidence Index that we share with all of you, and you all participate in on a quarterly basis. Obviously, without that data, this exercise would not happen. So with great appreciation, thank you for that participation. Again, in Tech Canada, we're 1,500 plus members now, on our way to 1,600 members, and truly enjoying supporting and assisting our membership through our chair community. Again, I want to thank everyone for their participation today. and we'll look forward to the next time we can come together. Dr. Andersen, thank you, and thank you to all the members.
Thank you.